Hi there, welcome to Kneppy Invest and welcome to August the 7th, 2024. It's been a good day on the market. We still have about 1 hour and 20 minutes left of trading. It started a little bit sketchy. The XJO was down about 0.5%, if I remember correctly, at one point in the morning, because there was a little bit of skepticism about what was going to happen to Japan. And as soon as Japan markets open, it went on a bit of a tear. I think they were up about, the Nikkei was up about 2.5%, 3%. Still up about 2.5%, 3%. In fact, I can confirm that right now. Yeah, Nikkei, yeah, up about 3% as I speak. That's the Nikkei 225. The other Nikkei says it's up 6.81%. Not sure why is there such a big discrepancy there. I'm not a big expert on the Nikkei, but green. And the other thing we've seen today is a bit of a shift in the American futures. Just after they closed their session about 6 a.m. local time, they were down pretty big. Most companies' share prices were down maybe between 1 and 2%. And I assume the NASDAQ would have been down maybe 1 or 2% as well. And they're now up significantly. Last time I had a look, the NASDAQ futures were up about 1.5%. And that is why we have rallied today, because what's happening in Japan, what's happening in the United States. Now, in saying all that, things are looking okay right now. Doesn't mean they'll continue to look good moving forward, because there is some signs out there that do suggest that maybe there is further downside. And because of the greater chance of further downside, I have de-risked my portfolio a little bit. I have increased my cash levels by a small amount. When I say small amount, about 3 to 4%. But I am happy with my cash levels just now in case we do see some further downside, which if it happens, I want some cash on hand. I do know some investors out there, I'm looking at you, Scott Phillips, who say you should be fully invested all the time because you can't time the market. But that's a sort of naive viewpoint of how the investing world works, because it's all based off probability. So all my decision making is based off probability. And I want to increase, over time, increase my capital. So when I see a greater chance of further downside, when I see risk, or maybe what risk on, whatever you want to call it, I will increase my cash levels. It has worked for me in the past. I'm not going to change it. And when I am very bullish, I will be mostly in cash. But I always like to have a little bit of cash on the side, just to take opportunities when they pop up. Another thing should also mention, I never go 100% cash. Even in the bleakest of times, I will always have some investments. So I'm not like Stephen Van Metre, who is the ultra bear. For those who don't know, he has a YouTube channel, probably has more than that. He has 217,000 subscribers. Video yesterday that I watched, get out now. Must watch, most important video of the year, market crash imminent. And then today, urgent alert, JP Morgan predicts more selling to come. It's not over yet. And if you go back maybe 5 years, he probably had the same videos being released back then. He's an ultra bear, thinks the markets is always going to tank. I just like to watch him because he has a completely different viewpoint than I do. I'm probably a bull. I like to be bullish. I think it's advantageous to be bullish overall because the markets increase over time. But he's an ultra bear, so I just like to get his viewpoints on these sort of things. And I think that's very important. Always take the opposite viewpoint of yourself and listen to those people who have those opinions, those thoughts. That's how we can grow significantly, not only as investors, but also as human beings. So that's even Stephen Van Metre. He always has information out there. He always has links and stuff like that, trying to prove his point, but he's an ultra bear. There's quite a few bears on Twitter as well. There's also quite a few bulls on Twitter. Anyway, so the agenda for today's video, I would like to go through the ASX today, as I do every single video, look at the best and worst performing sectors, indices, and also companies. Also have a top 5 stocks of the day. Fairly quiet. Don't have many candidates for top 5. In fact, only 2 potential candidates I have left out. And even those 2 companies, I don't mind leaving those out. So no financial results released today. I can't remember any financial results released today. So it seems like this week of August is very quiet. And maybe it's really going to ramp up next week. So I didn't realize it can be quiet in August, but definitely quiet day. Also, I do have a few tweets and a market index article I did read this morning. And this is pointing out to the belief that when interest rates drops, that's really good for equity markets. It's not absolutely true. It all depends on why interest rates are dropping. And through history, one of the reasons why interest rates drop is because the economy is tanking. And the governments or the central banks need to stimulate the economy. So I'll show you an article and a tweet in regards to that. And then maybe a few charts. If not a few charts, I want to look at a few of your comments. So let's get into the video. Starting off with a few articles. So this one was on Market Index, written by Gal Capolingo. This indicator predicted every US recession for 35 years, and it's flashing a major warning for stocks. I'm not going to talk about what this indicator is. So this was released on Monday, the 5th of August. So it took me 2 days to read it. But there was a really interesting little passage right here. I think he wrote this in his 15th of July evening wrap. I'm going to quote what I wrote there because I can't put it any better. That's not me saying, that's him talking or writing. There is an inflection point where lower rates stops being good for stocks. So there has been this belief that when the central banks around the world start lowering interest rates, that's good for the stock market. Not necessarily so. Anyway, he continues. This is the point where market yields are falling, not because of central bank cuts being a good thing and helping stocks, but because the US economy is on the brink of recession, and that's bad for stocks, and history proves that. So a lot of times in the past, when you do see interest rates dropping, it's because the American economy has moved to recession, and that's not good for the stock market. Then he goes on and on, talking about other stuff. So have a read of that article in Market Index. It's free. I do like to follow Carl Capolingo as well. He writes some really good articles, and he's more of a technical analysis or chartist than anything else, but he does look at other stuff as well. Anyway, and the other but another tweet that's along the same sort of lines. This is from Mike Zaccardi, CFA, CMT. I think of CMT as those people who help people who are in trouble, health people. CMT, like the cardio, not the cardio, what do you call it? Not Charcot-Marie tooth disease. Okay, not country music television. Something else. Anyway, I'm assuming CFA is accounting and CMT, I have no idea. Anyway, it's not important. So this is what he said. This was from a tweet on August the 2nd, so almost a week ago. And this is an important tweet, in my opinion. Historically, there are 3 types of Fed cuts: panic cuts, soft cuts, and hard cuts. Panic cuts are positive stocks if the event does not impact Main Street. Examples, 1987 and 1998. Soft cuts, 84, 95, and 2019, are positive for both stocks and bonds. Hard cuts, which are more common than the other 2 cuts, so we're talking about 73, 74, 80, 81, 89, 2001, 2007, are negative for stocks but positive for bonds. So those hard cuts are those type of situations when they want a bit of stimulation for the economy because it's moving to recession, maybe contracting, that sort of thing. So those are the types of situations when we might see interest rate cuts. So again, just because there might be interest rate cuts does not necessarily mean it's going to be good for equity markets. We have to understand, why are they decreasing interest rates or lowering interest rates? And at this point in time, particularly a lot of rumors out there that they might do an emergency rate cut in the United States. That would be a bad sign. That would be a sign that they are really concerned about the economy. Okay, so that's all I got for Twitter and that article. Now let's have a look at the ASX today. And it's been a good day. And just because it's been a good day today doesn't mean tomorrow we won't be down 500%. Although if we are down 500%, that means all stock prices are probably negative. And if they're negative, I would be buying every single company on earth. Maybe not every single company, but I would be mortgaging my accounts and I will be deleveraging or over leveraging myself because share prices can't go negative, and it's an impossibility that we're going to see a drop of 500%. Anyway, I'm rambling on. Let's have a look at the market today. I'm assuming most sectors are up, maybe one or two are down. Let's have a look. No, all sectors are up. Energy, bad day yesterday, good day today, up 1.98%. Good day for real estate, utilities, industrials, telecommunications, healthcare, and even IT, and even discretionary. Financial staples and materials up by a little bit. And if we do have a look, in fact, I'm just going to decrease the font here. If we do have a look at the different indices, the only indice that's down is the banks. So the banks have had not a good day today, according to this. Let's have a look at the ASX 20. Only up 0.32%. So I would assume the banks have been a bit of a roadblock, maybe not roadblock, it's probably not the good word, have been a bit of a hindrance to the market performing even better. So the ASX 20 is only up 0.46%. Everything's on a tear. Everything else is up good. Tech is up 0.95. Small caps up 0.93. So let's have a look at the ASX 20. And I'm assuming a few of the banks are down. I'm just assuming that. And I'm assuming Santos Woodside have gone on a really good run. I'm assuming Goodman Group is up a lot today as well. So let's have a look. Oh, how many companies up? I'm going to say 5 down, 15 up. Oh, close. 6 down, 14 up. Which companies are down? Fortescue, BHP, which is probably a suggestion that iron ore is a little bit weak. And then we have NAB, Westpac, and Rio Tinto. So iron ore and 2 banks. And it's just changed. Now it's 5 down, 15 up, which means probably Woolworths went from being down, or Commonwealth Bank went from being down to now up. And the best performing companies, Woodside, Santos, Goodman Group, Telstra. There we have. The 3 companies I thought would be at the top of the list are at the top of the list. So honestly, a pretty good day in the market. And I found it a good day to unwind some of my positions, increase my cash. And if this is the bottom, or maybe a few days ago is the bottom, then I can start increasing my holdings, decreasing my cash. So it's all about your risk tolerance, I suppose. And my risk tolerance at this point in time is I want to be in a little bit more cash because of the potential of further downside. Okay, let's get to the top performers, and then we get to the worst performers. I'm assuming a few of the companies at the top of my top 5 stocks of the day are in the top gainers. Let's see if I am right. I have not had a look at this yet. No, not Merchant House International, up 114%. Okay, this is an interesting story. Merchant House International Limited sold something. I don't really follow this company at all. Sold something and they've just given up. And what do I mean by giving up? Seems like they're a manufacturer, leather, boots and shoes. I've really never had a look at this company before. Factory closure and future update. What is this? Let's have a look-see. They are advising they will permanently cease operations at the American Merchant Inc. textile factory in the United States. The cessation of business follows continued losses. So this company just makes losses. So they've just given up. And what they've also done here, following the sale of the assets, it is the intention of the company to seek a voluntary delisting of the company from the ASX together with seeking approval for shareholders to distribute the net funds held by the company at that time to shareholders, followed by the winding up of the company. So again, they've given up. We don't want to be on the ASX anymore. Don't want to be in existence anymore. And that's probably why the share price is higher, because the market likes it. The market is saying, you suck, your company sucks, and this is a good thing. And that's why the share price is up 114. I was going to say 114,000%, up 114% today. Highcom. Has there ever been a video where I featured a top stock of the day in 2 consecutive videos? We're going to have that today. Highcom up another 34% today. I'm so glad I did not sell my position in that company. I would have sold if I did sell at about 12 cents. So it's almost doubled since then. I'm just thinking maybe I should have added to my position yesterday because that was a pretty good signal. And LBT Innovations up 33.3%. I have put those 2 companies in number 1 and number 2 on my top stocks of the day. I did have LBT at number 1 and Highcom at number 2. Maybe I should shift them around. Other companies have gone on run today. We have Centaurus Metals. I don't know if they've released anything. I'm assuming they have, because I don't know why the share price is on a run. There we go, 7th of 8th. Yep. Jaguar project presentation. Okay, so that's interesting. I'm going to have a look at the chart for Centaurus. They released that at So they must have said something in a presentation. So I want to see if the share price went on a run when they released that announcement. Yeah, it sort of did, didn't it? So the share price was hovering around 33.5 cents, and then the share price and the volume really increased at about 12:10 p.m. and they released that announcement at 12:44 p.m. So they must have done the presentation, then released that to the ASX at 12:44 p.m. And during the presentation, they must have revealed something because the share price is up a fair bit. Although the other thing to note here, the presentation is marked non-price sensitive. Yes, non-price sensitive, hasn't got the dollar sign next to it. So that's interesting in itself. But the market seems to have liked that announcement from Centurus Metals. If we have a look at the daily chart for this company, oh, share price in a downtrend looked promising, but I'm not interested in this sort of chart just yet. And plus, Centurus Metals is just an exploring company. It doesn't have or is not in production. Pretty sure Metal Hawk was down fairly significantly the last 2 days, now up, so probably a bounce. And I think the same with Quickstep. Just going to have a look at the chart for Quickstep. Highly volatile recently, this company, all over the place. Look at that. Up and down like a yo-yo. The day traders are probably on this, in this like Flynn, Loving this. The day traders love volatility, and I can understand why, because that's how they make money. Volatility. Volatile stocks. And a Quickstep is probably one of their favorite playthings right now. Anything else here? Nothing of note. So let's have a look at let's have a look at this list by market cap. So Pilbara Metals, nice bounce. Suez Limited, nice bounce. Arcadium Lithium, nice bounce. So a lot of these companies are just bouncing because of bad days in the past, like Metro Mining, Appen up 10.3%, Titomic 11%. Yeah, so I'm not really reading anything into this at all. In fact, again, you could take advantage of these bounces and maybe take some profits. Or maybe if you think this is the start of another bull run, maybe add to your position, or maybe start a position in some of these companies. Don't know. It's up to you. I am not the boss of you. You should be the boss of yourself. St. George Mining down 24.4%. I'm pretty sure that Next Investors sort of recommended this the other day. I have a feeling it did. Let me just have a look. SGQ, was it? So, yeah, it was up 20.6% yesterday. I'm almost certain that was because of Next Investors. I don't know why people take their recommendations and then just buy blindly. That's what it seems to happen with that company and their recommendations. Although, because a lot of people react to it, the share price of these recommendations go on a run. But I found out last time they did this that the company itself pays for them to recommend it, which seems a bit iffy to me. I'm not sure if that's what St. George Mining does, but that's what the other company did. AL3MD, whatever it's called. They actually did pay or do pay Next Investors to recommend that company. So anyway, St. George Mining up big yesterday because of the recommendation from Next Investors or an article from Next Investors, and share price has gone the complete opposite direction today. The chart was looking interesting. The chart was looking interesting, and look at that. Yeah, massive volume, and that's... I wonder if they did any announcements. Okay, they did an announcement yesterday, so it could have run on that. But I'm pretty sure... acquisition. They made an acquisition. So there's a chance the share price ran on that. But again, I'm pretty sure, I'm not 100% sure, but I'm pretty sure that Next Investors did recommend that St. George. Let me just guess. Next Investors, St. George Mining. Yeah, here it is. Let's have a look. Date of initial coverage, 6th of August, yesterday. Initial entry price, 2.5 cents. Okay, so yeah. It's just weird that it coincided with the company releasing something positive. Share price been on a run? Interesting, there you go. So bad day for that company, but good day yesterday. Mosaic Brands did make it into my top 5 announcements of the day. They mentioned something that I've never heard before. So I do want to talk about that company. Mosaic Brands down 15.22%. There is questions about the viability and the the viability and the future of that company. And you can just see it in the chart and the markup of the company. Markup of the company is $7 million right now. But this company has revenue of 700 million and they just can't turn a profit, or they find it very hard to turn a profit, which is concerning. So if they do make it, $7 million for that company is really cheap. So the market is telling us this company won't make it. That's what I think of when I see Mosaic brands. Anything else here? No. You might think differently. You might think, there's that company I really, really like, but no. Let's have a look by market cap. Spartan Resources, anything of interest here? FBR, Integrated Research. These are my top 5 stocks of the day, down 8%. They've announced a new CEO. Well, I'll talk about why that's in the top 5 stocks and why I think the share price is down today. I have been trading that company, and I did take a bit of profits because of the announcement today. Otherwise, nothing of note else here. Janison Education did release something the other day, but I didn't miss it, but I wasn't that interested by it. Annual results update yesterday, and the share price was down 3.92%. So it seems like the market doesn't like that announcement. Share price down 2 days in a row for Janison Education, and the chart looks pretty ugly as well. Okay, so let's get into the top 5 stocks of the day, and we'll start with number 5, Integrated Research. Share price down 5.5. We've had a nice little recovery today. I'm just glad I sold a little bit higher than that. Share price has been low as 72. So share price was down probably about 10% at one point today. And the reason why I think there's been a little bit of selling in this company today is because they've appointed a new CEO. So back on the 16th of July, they announced the trading update and the CEO transition, and they announced the new CEO today. I had a look at this and I went, this is pretty underwhelming. Pretty underwhelming. Ian Lowe, appointed CEO of Integrated Research. They do mention that he brings a wealth of experience and a proven track record of success. I do want to question that little comment. Proven track record of success in building and consolidating high growth technology businesses. Okay, so he has served as CEO and executive director of ASX listed and privately held companies. And I was like, oh, has he? Which companies? And these companies include AdSlot, EP&T Global, Opus Consulting, and Facilitate Digital. And my first thought was, well, I know a couple of those companies and they suck, and the other 2 companies I've never heard of. So AdSlot, I'm not even sure if AdSlot's still on the ASX, but it never was successful. AdSlot, ADS, yes, it's still on the ASX. It's never been successful. Just let's have a look at the chart for this company. AdSlot. And look at the chart for this company. It's been a horrific chart. I don't know when he was a CEO. I suppose I could link him, whatever you want to call that, linked in him. The other one was EP&T Global. I'm trying to remember what that ticker code of that company might be. EP&T. What's it called again? I'm just going to copy and paste. EPX, that's it, EPX. Okay, so, and let's have a look at this company's chart. And this is going to be the same sort of thing. This has been a disastrous. And so straight away, I did know these 2 companies, AdSlot and EP&T Global. And I went, those companies have not really done much. If anything, or they've really disappointed the market, disappointed the shareholders. So is this a good hire? That's my main question. And as soon as I saw this, I went, I'm going to sell some shares. Not completely, but I just don't like this particular hire. So it does... it is important. CEOs, managing directors, whatever it's called. What is he? CEO and executive director. They are important. I don't think this guy has that track record right now. He has to prove to me and to the market that he can build integrated research, that he can continue this turnaround story. And that is why I think the share price is down today for integrated research. However, it's not down as much as it was. It was down over 10%. And that's the reason why I've taken some profits with that company. Coming in number 5, integrated research. Coming in at number 4, we have Mosaic Brands. An absolute disaster on the ASX. I actually at one point was trading this company. Have a look at the chart for this company. I'm trying to remember when. The share price was $1, and I had a look at the financial results once. So this would have been probably back here. Yeah, in this little rally here in late 2020, early 2021, I was trading this, and then they released their results in February, and I had a look at the results. And I was like, I don't understand this business. They had, what was it? They had negative equity or something, significantly negative equity. I'm going to have a look. Just bear with me for a second. I've already there. Sorry. Let's go back 2 years. I'm going to have a look at their financial report from 2022. Hopefully it's the same. There was a massive red flag, and I could not get clarification from anyone around this. Now, my thoughts was, I have a feeling it was, I have a feeling it was equity, or maybe it was, it was current assets versus current liability. So in this particular year, so they had total current assets of 166 million and total current liabilities of 320 million. Yeah, that's exactly what I was. Yeah, that's why that triggers some sort of memory now. And I saw that, I went, how does a company have minus $150 million of net assets, net current assets? In fact, their equity was negative. Equity was minus 85 million. So negative total current assets and negative equity. I went, how does this company survive? And then I was thinking to myself, because I could not get any clarification, I could not find any literature on this. And then I did think to myself, that could make sense for a high turnover company. So a company that turns over lots and lots of their products. And maybe Mosaic Brands does that. I was thinking maybe Woolworths does that. And I'm pretty sure I did have a look, but I didn't find many companies with this sort of really bad, in my opinion, this is a bad balance sheet. And I was like, oh, stay away from this company. Even though I was training it, no more. And I don't think they have changed in the most recent year. So stay away from this company was my thought back then because of these red flags. And I still have not seen anyone say why it could be a good thing. Having net current assets of 150 million and net equity of negative, 85 million. And maybe this is the reason why this company is in trouble right now. Share price is now at 4 cents, markup of $6 million. And let's go back to this particular report or year. That revenue of $571 million. How can you not be successful with revenue of $571 million? Well, potentially revenue is dropping, potentially really, really low margin. So this is a clothing brand. They have Rivers, Katie's, stuff like that. Rockley, I forget exactly what they do. 90B, Miller's, W Lane, Rockman's, Katie's, Crossroads, Autograph, Beam, and Rivers. So really low margins for this company. In fact, this particular year, they had revenue of 619 million, but had a loss. How do you have a loss? And I even think if you look at the cash flow of this company, it was up a little bit. It was $44.6 million this particular year, but that's not including leases. Now, what does this company have? A lot of stores, which means they pay a lot of leases. So if you look at that operating cash flow, 44.6 million, and go down to the lease liabilities, $77 million of lease liabilities. That's, rent and that sort of thing, which means if you take that into account, they were operating cash flow negative by about $32 million for this particular year. In fact, 2021, they were okay. That seemed like an okay year, but a really bad year in 2022. So a lot of red flags when it comes to this company. In fact, you probably could do a bit of a case study on Mosaic Brands. Potentially, I haven't even got to the announcement today. Why is the share price down 13% right now? Let's have a look. So they went into a pause in trading at 9:51 a.m., which means the company can't be traded. So if there is a pause in trading, usually that occurs just before the market opens and there is a trading halt. They didn't go into a trading halt, but they just had a response to media reports. And that's all they had to release. And then back to trading. Share price went to a low of 3.4 cents, which means the share price at one point today was down 25%. So what was this announcement? It's negative, and they're talking about something I've never heard of before. And I'm not an accountant, that sort of thing, but we can learn from these sort of announcements. Okay, so Mosaic Brands refers to a media report on the 6th of August, 2024, regarding the company entering safe harbor. I was like, what the hell does safe harbor mean? Does this mean the company is exempt from any bankruptcy or any something like that? I actually did Google safe harbor provisions, and it did come up with, what are safe harbor provisions? The safe harbor rule does not cover all debts. It only covers debts that are incurred in connection with the course of action and during the period commencing. What is a safe harbor provision in Australia? This is from a called Chadwick. The safe harbor insolvency regime allows company directors to implement a restructure without the risk of personal liability for debts should the restructure ultimately fail. So it sounds like the company directors are maybe trying to cover themselves. That's what I read from that. Yeah. So they're just trying to protect themselves. That's what I think this means. So this is another bad sign for the company. Now, do they mention, I actually haven't read the rest of this. Yeah. They just talk about how they're going through a restructure, there's operational issues, all that jazz. They group wishes to confirm that its directors have and continue to take advice from advisors on their ongoing duties. These fiduciary obligations are matters the board has always taken seriously, and we confirm that the advice provider has extended from time to time to consider the applicability of and compliance with the safe harbor provisions. That's in the first or the second paragraph there. Confirms that during this time, Deloitte has been advising the company on refinancing considerations that have previously been announced to the market. And then they talk about previous or early announcements that the company is I won't say in trouble, but things are not going well for the company. Anyway, so that's why share price is down. That's why the markup is $6 million. And even though this company has a revenue of 500 plus million, because they just don't know how to turn that revenue into profit. I would assume they have pretty high debt as well. Let me just have a look at the most recent Appendix 4C. We can confirm this as well from this. Now, I had a look at this Appendix 4C when it came out. I was like, it's not that bad. It's not that bad. But this is just a cash flow report. So receipts 122 million, 506 million for the year. So a lot of receipts. Operating cash flow positive 12.9 million, but again, that's not including leases. 57.3 million for the year. The leases is found down here somewhere. Where is it? Where is it? Or maybe they've put the leases in that section. Leased assets, $20 million. There you go. But the most important thing about this particular Appendix 4C was the debt. $42.6 million of debt for a company with a markup of $6 million. That is a concern. So a lot of people like to look at debt to equity. Well, actually, this company would have a negative debt to equity because the equity is negative. So this would be a concern straight away if you look at debt to equity. So a lot of people like to only invest in companies with a debt to equity of less than 0.7% or 0.7. It's not percent, 0.7 would be 70%, or 0.5. And a major red flag is when debt to equity gets above 1 or above 2. That is a red flag. Well, this company has negative debt to equity. I suppose if they had net cash, that would be negative debt. So if they had negative debt and negative equity, that debt to equity would be positive. Oh, so many possibilities. Anyway, at this point in time, I would say that Mosaic Brands right now, at this instant, is an uninvestable company. I think there's a great chance we might not see this company on the ASX in a few years' time. But there's a big but here. If they make it, if they turn things around, if they can find maybe a management team that can turn that receipts and that revenue into profit, into cash flow, this company would be cheap at these levels. But do you want to take that risk? For me personally, no. Okay, next on to company number 3. And this company was not in the top performers or worst performing companies because they're also in a trading halt. In fact, we had Mosaic Brands go into a pause in trading at 9.51, and Neuren Pharmaceuticals went into a pause in trading at 9.55 just after they released a second quarter 2024 update. Now, why did they go into a trading halt? I was interested with this. I am a shareholder of this company, been a shareholder for a long time. They don't need money. They've got $200 million plus of cash. So it's like, oh, this had to be in some sort of announcement in regards to some sort of results. And it is. In relation to the top line results of a phase 2 clinical trial of NNZ 2591 in Angelman syndrome. Angelman syndrome is not in regards to men who think they are angels. Anyway, or that TV show, like maybe Angel, or no, a Vampire with a Soul. So this is not in relation to people or men who think they are vampires with a soul. Anyway, interesting enough, I did have a look at the ComSec page. Indicator price is down 9.3%. I actually did not have a look at the quarter or the second quarter 2024 update because they were in a trading halt, so it was sort of pointless at that point. But then I had a look at this page. I was like, oh, the market doesn't like either the 2024 update, the second quarter, or the market thinks this particular phase 2 trial will not be successful. Or maybe the market's just covering their butts at this point in time. I actually then opened up the second quarter results, and no, I was like, I'm not sure if this disappointed the market. I don't know. Didn't disappoint me, but again, I'm maybe a little bit biased in regards to this company. So net sales up 84.6 million. So this company gets royalties from sales and pretty good royalties. In this particular quarter, they received, will receive or earn, probably is the best word here, royalties of $13 million. Yes, $13 million. And nice increase from the last quarter. Updated guidance. Maybe this was a downgrade. So they do mention it. In fact, we probably could maybe have a look if this was a downgrade, which I should have done. I don't know when they would have released the updated. Here we go. Here it is, 4-year guidance. So possibly one of the reasons why the indicator price is down is because updated guidance is lower. Because let's have a look at the last time they released guidance for the full year. Let's have a look-see. 4-year guidance of $370 to $420 million of revenue. Now they're guiding for $340 to $370 million of revenue. So this is a downgrade. So straight away, we know why the indicator price is down 9.3%. It is a downgrade. So they're not generating as much revenue as they thought only a few months ago. Now, me being cynical, the reason why they've gone into a trading halt and they're releasing these phase 2 results is because they knew the share price would have tanked after this update, and they went, now's a good time to release their results because they're going to be good, and that should maybe counter the negative sentiment in the market over these second quarter results. So that's me being a little bit cynical, thinking they might do that. Anyway, let's have a look at the chart. Now, if I was trading Neuren Pharmaceuticals, I probably would not be in this company right now. I would probably be out of this company because if you do look at this particular chart, it's starting to look negative. So if I was trading Neuren Pharmaceuticals, I would be out. But I'm not trading this one. I bought Neuren Pharmaceuticals way back in December 2022. December 2021. That was almost 3 years ago. I have taken profits. I don't need to take profits anymore. I'm just going to let this run. Maybe someone out there would say, well, it's still money. It's still your money. You can take profits now. But yeah, this is a sort of situation where I will just leave it. Just let it go. Let it run as long as possible because I think this company has significant potential in the future. Anyway, so that's Neuren Pharmaceuticals coming in at number 3. Coming in number 2, we have a company. Actually, no. Let's see which company we're going. Whichever share price is higher or lower will come in number 2 between LBT Innovations and Highcom. Okay, so LBT Innovations is coming in number 2. Sorry, but the market just doesn't like you as much as Highcom. Okay, so LBT Innovations. I have a history with this company going back to 2014 to 2016. I think I might have mentioned this company in the past. Now, they did release an interesting announcement today. So this company, they have automated the culture plate stuff. What's it called? I think it's called they definitely automated some sort of process when it comes to plates or cultured plates. Let's open up this particular announcement, and I'll just go to the About section. just to put what they do in their own words, because I just stuff it up. Provides intelligent. Well, there you go, intelligent. I'm not intelligent, so at least we're getting some intelligent words from LBT Innovations. They provide intelligent automation solutions, I got that word right, to microbiology laboratories. I don't care where they're based. They have developed a best-in-class technology. Well, that's your own opinion. The Automated Plate Assessment System, APAS. I did know it was called APAS, but I didn't know what it meant. Automated plate. Using artificial intelligence and machine learning, ooh, exciting words there, software to automate the imaging, analysis, interpretation of microbiology culture plates. I'm pretty sure I said culture plates. There you go. So I do know what I'm talking about. And to be honest with you, what I know about this company goes all the way back to 2016. So that's 8 years ago. So I do remember a little bit about this company because I was a shareholder of LBT Innovations for about 4 years. And then I sold out in 2016. I'll tell you why I sold out. Anyway, I saw this announcement and went, oh, Astrazeneca. I'm not going to say they're name dropping, but I've been waiting for this company to start gaining traction, start gaining momentum in this APAS automated culture plate system, because they haven't really seemed like they're gaining any traction. Now, they received FDA approval in 2016, and you'll be able to see the market reaction when they gain that FDA approval. It's taken them 8 years for this company to really start possibly gaining attraction or gaining traction. I'm not sure they're just yet. They're just yet, but Astrazeneca. I know who this company is. You should know who this company is. I'm pretty sure Astrazeneca has a market cap of, I would assume, Astrazeneca close to $100 billion, maybe. Maybe I don't know this company too well. $246 billion. Well, I was way off. So this company has a market cap of $246 billion, and LBT Innovations have a contract with this company right now. Now, I would be a cynic in saying that all the benefits of this particular contract are swaying towards AstraZeneca. LBT probably taking all the risk, but they do have numbers here. And those numbers, or the total contract value, is between 3.4 million and 4.1 million. AstraZeneca is buying 5 of these APAS systems. So there is some maintenance and support services that LBT will provide to AstraZeneca. And I'm assuming they do receive a fair bit of money whenever AstraZeneca uses these machines. I'm pretty sure that's what they should do if they don't do that. Anyway, so it's exciting announcement from LBT Innovations, and that's why the share price is up. Now let's have a look at the chart. So I first started following this company, or bought some shares in this company many years ago. It was about 2012, 2013. I saw what they were trying to do, and I was like, ooh, that's exciting. And then the company received FDA approval. I believe it was the 10th of October 2016. Share price on that day rose 94%. The next day, the share price rose 94%. Yeah, in consecutive days, 94%, 94%. And then a few days later, on the 14th of October, share price went above $1. Now, it doesn't say $1 here, but it went above $1. So there must have been some sort of consolidation in shares. It went above $1 because I sold at $1. Wait there. I just adjusted for... No. I thought maybe it was adjusted for dividends, but there's no reason why this company would have provided any dividend. But anyway, the share price did go above $1, and I just sold out completely on that day. I just went, no. I don't care this is FDA approval, because sometimes it takes a while for a company to go from FDA approval to actually selling the product. Sometimes it doesn't take long, but sometimes it takes a while. And this company has been in the doldrums ever since. There hasn't been really any significant... You can see on occasion, share price goes on really good runs, but I need some financial confirmation from this company at this point, because the share price has fallen to as low as 0.4 cents. Now it's 2 cents. So it's at least been a firebagger for anyone who took a position back in late 2023. But again, I need further proof from this company. This is a step in the right direction, but I need further proof. But an exciting announcement from the company. I will give the company that credit. I wonder if the shareholders are excited, because I do know the shareholders have been pretty angry with the company over the past 5 to 8 years. Okay, so coming in number one, pushing LBT innovations out of the number one spot is Highcom, a company that has released 3 price-sensitive announcements in 3 days. On the 5th of August, ballistics product order, 8.9 million. Yesterday, a 2.5 million ballistics product order. Today, financial year 24 guidance and company update. Just look at the share price. This particular update is pretty positive. Now, I did find one little negative in it, and I was like, oh, will the market not like this? And the first highlight is these results are in line with previous guidance. So I think the market's saying, with the share price up 37%, we did not believe you before when you issued that guidance. We didn't believe you, but now we believe you. Cash has this is another very important thing. Cash has significantly improved from 1.6 million to 6.2 million. No debt. So 6.2 million. The company has a markup of, well, it's probably increased significantly now. It's probably 20 to 30 million, 23.6 million. So the company still has an enterprise value of 17 million. But I would say this company always has a bit of a discount to it because it can be quite lumpy. Their orders, their contracts, their income, well, not their income, their revenue, it can be quite lumpy. So you will see this company have a lower than markup than you might assume based off their revenue, their potential profit, that sort of thing. But when the market loves this company, and on occasion does love this company, the share price can go on a pretty big run. And potentially, we are now seeing the turnaround in sentiment around Highcom. So let's go back to the announcement. No debt. Relationship with AeroVironment expanded to new products. New orders of ballistic products are valued at 13.7 million. We have seen some of those announcements recently, supplied during first half of financial year 25, and they keep on going. Now, there's one little, another thing here. EBITDA for the second half, $2 million. So EBITDA positive for the second half. And there was something else here. I'm going to, I bet you I won't be able to find it now. Oh, no, it's actually in the first paragraph. So I thought in the first paragraph, they do mention something slightly negative. Now, holistically, or the overall, if you look at the overall picture, it's actually not negative, but the market is very short term. And I just thought, me being pessimistic about the market, how it views stuff like this, they actually mention that the revenue is approximately 46 million, being at the lower end on the previous guidance. The revenue was impacted by a timing issue for a recent contract that was delayed. This revenue will now be recognized in the first quarter of financial year 25. So I saw that and went, oh, I don't think the market's going to like that. And the market has made a fool of me today. The market doesn't care. Everything else that is in this particular financial update is positive for the company. I think the company is starting to turn around. The new management has come in and they are doing an absolutely great job. And I have to give the board of this company the credit. They have to, I think they give an A+ because of what they have done in the past, or in 2024. They got rid of the old management team. They weren't performing and they made changes. A really active board, and I have to give them credit. They have done a bang-up job because now we are starting to see the share price turn around. So HCL, they used to be called XTech, ticker XTE. Now it's Highcom. And yeah, the bad day for this company was the 13th of February. Share price on that day fell 44%. Now the share price is running. Not only that, the volume, massive volume coming in for this company. Is this a breakout for Highcom? I don't know if I'm there just yet. And we have seen a little bit of selling today, just like we saw selling yesterday. But I just did not think they were going to be, they were going to release another price-sensitive announcement today. So share price of this company is moving in the right direction. Definitely moving. I think sentiment is starting to shift for this company. And I am thinking of adding to my position. I am thinking of it. If I see the share price pull back to below 20 cents, I am thinking of it. I will say that right now. In fact, today, the share price did get to a low of 19 cents. Should have bought on that little bit of a dip. Okay, so that's the top 5 stocks of the day. What were your top 5 stocks of the day? I've never asked that before. I'm going to actually have a look at a few of your comments. Let's have a look. Scott 119RB says, I reckon Pro Medicus is an example of over-leveraged long positions getting a margin called and being forced to liquidate overvalued stuff. Ronto, that's a possibility. Let's see if it's down. It's up a little bit today. I wouldn't be surprised to see, I don't know, it all depends on the overall market. I wouldn't be surprised to see this to be a buy the dip situation, just like we saw back in February. The share price did fall a fair bit in February and then recovered fairly quickly. This is not the end of the uptrend, but I have been thinking about taking profits with this card because it's just so overvalued. There is no debate about that. This company is overvalued, and I just don't know. But what I was thinking of doing is just selling half and just maintaining the other half because I've made significant profits with this company. So why not just take that half and increase my cash? So I've been thinking about doing that. So maybe I will do that. Don't know just yet, but yeah, possibly. Neil Weston, thank you for your very kind words. Fishball says, do you know that you always say I reckon and I think, but it always turns out to be right? Just saying. The reason I probably say a lot of I reckons and I think, but always turns out to be right, I wouldn't agree with that, is because I'm not certain about the future. And in my main job, my professional job, I'm forecasting the future. And I think you need humility when you are thinking about the future because nothing is certain. There's no certainty in life, no certainty when it comes to the future. I just have no idea. No idea. But in knowing you have no idea, you can position yourself to take advantage of the fact that you have no idea and other people think they have an idea. And right now is a perfect example. So I am increasing my cash levels. I could be wrong. Maybe this is the bottom and the market will go on a massive tear. If that happens, that's okay because I still have a lot of positions. And then I'll add to my positions if that happens. But if the market starts to go down and continues to go down, I will actually start to increase my cash levels. Sell out of some of my trading positions, increase my cash levels to take advantage of when the bottom starts to appear. Now, it's almost impossible to time the market. So there are some people who say, you can't time the market, so there's no point trying to. That's foolish. It's wrong. You can't perfectly time the market, but you can time the market using technical analysis. And I do that all the time. So I very rarely, sell at the top, buy at the bottom. On occasion I will, but it's mostly luck. So that's what I think. So I didn't realize I say I reckon a lot, and I think. I can imagine me saying I think a lot, but and again, I am a human being. I make mistakes, and to know that you make mistakes, it's actually quite important, and it can actually lead to a much better life and much better investing success if you understand you make mistakes. And I did listen to, what was it, Scott Phillips. He said on his podcast, either the one on Friday or the one on Sunday, that they get a lot of messages from people saying, you recommended this company and it's down now, you suck. And that drives me nuts. It absolutely drives me nuts that even though I'm not a fan of Motley Fool, not a fan of their advising service, it just drives me nuts that people would look at the company or this advising company or whatever you call them, make one bad decision and think, well, you suck if you were recommending this company, and it's gone down. I have seen people say that all the time about different advisors, different fund managers. Oh, they recommend this company. It's gone down. They suck. They all make mistakes. Warren Buffett makes mistakes. Warren Buffett bought airlines after he said airlines are a terrible company. He bought airlines. He makes mistakes. I think he bought Kraft Heinz and the share price went down 50%, something like that. He makes mistakes. We all make mistakes. The most important thing is understand you make mistakes. And all these people who are saying, oh, they make mistakes, they suck. They are, I can almost guarantee you, they are pretty bad investors because they don't understand you are going to make mistakes. The whole reason we make mistakes is to learn from those. Well, that's not the reason, but the most important thing you can do when you make mistakes is to learn from those mistakes. Be a better investor and a better person. I know. The other thing I did is there was a fund manager I talked to once, and he said the most frustrating thing as a fund manager is when you're really successful and you're speaking to a client, the client will focus on those bad investments you made. They'll completely ignore all the good investments, but just focus on the bad. Why did you buy this company? It's gone down. Why did you do that? And the fund manager would say, well, what about this? What about this? I've done really well here. And that's just human nature. You focus on the bad stuff, but don't really focus on the good stuff. And I I try to do that with myself. I try to focus on really good decisions I've made, but I also try to focus on the bad decisions because that's how we learn. We also learn from the good decisions, but if we are putting our money with a fund manager or something like that, we have to understand they will make mistakes. Don't blame them if your portfolio goes down because they've made a few mistakes. Dredgen has or is really happy right now. I added Highcom to my portfolio a few weeks back after guidance update. Let's hope new CEO keeps up the good work. I can't disagree with you, and I just wish I added to my position, which I might be doing soon. And still got a few minutes here. This is about Audinate. I guess the 4 Audinate directors who between them offloaded over 4 million in stock back in February, March of this year at prices above $19 will be feeling quite pleased with themselves after today's update and market reaction. I believe, if I remember correctly, believe the Audinate CEO said at one point the market is overreacting. We're not doing that well, or something along those lines, and the share price kept on increasing. And one of my mistakes in regards to Audinate is simple. I should have taken profits. This was a case of me just not listening to the charts, and I should have listened to the charts because it was screaming sell. It was screaming sell, sell, sell. This chart is screaming sell, sell, sell before they released this particular announcement. But I said to myself, no, I want to own this company for the long term. And it just makes me thinking that I should spend more time on technical analysis, and no company, even if it's a company I like, for the long term, deserves to be held when it's in an obvious downtrend. And this was obvious. Things were not going well for Audinate, and the chart is screaming that. So again, I'm not going to blame the directors, not going to blame anyone else except myself. That's another very important thing. If things go pear-shaped for you, don't blame anyone else except yourself. So I have had a few people, not lately, but when I first started this channel, oh, you recommend this company, it's gone down, you suck. That happened rarely, but I did get a few comments like that. And I just replied, if I did reply, take ownership of your decisions. That's important. Climaru, what podcast on investing do you follow, Kneppy? I tend to follow Ausbiz the Core, anything from Livewire and Fear and Greed, but have struggled to find many more worthwhile who cover the ASX. In fact, I'm going to tell you right now, some of the podcasts 2 missed calls, voicemail. Here are some of the podcasts I listen to, not watch. Ausbiz the Core, yes. The 7 investing podcasts, that's more American focused. The Acquirers podcast with Tobias Carlyle, so value investing. Oh, the AI podcast. Apparently that's from NVIDIA or NVIDIA. A lot of sporting podcasts, Ask the Compound, Australian Investors podcast. They're focused mostly on ETFs. So a lot of times I actually delete that podcast without even listening. Baby Giants Investing. I like that podcast. They're focused on small caps, and I do like small caps. For instance, the most recent podcast they released, which was on the 2nd of August, they talked about Drone Shield, advanced braking technology and Adacel technologies. And the one before that, they talked about Aroa Biosurgery, Environmental Group, Technology One, which is interesting. And the one before that, they talked about Babcock Consultants, EV tariffs, PSC Insurance, and Beamtree, which I talked about the other day. What else? Sporting, buy, hold, sell by Livewire Markets, chat with traders, which I don't listen to all that much. A lot of sports. Debunking economics, that's not really investing. That's with Steve Keen and Phil Dobby. Economics Explained with Gene Tunney. Fear and Greed, a business news. Fear and Greed. That's just Fear and Greed. That's what it's called. Finer Markets Points, ASX podcast. That's just an ASX top 10 momentum stocks, and these particular episodes go for like 2 minutes. The Good Oil with Scott Phillips, Grattan Institute, How Leaders Lead with David Novak, Invest Like the Best with Patrick O'Shaughnessy, Invested, the real #1 investing podcast with Phil Town, but I don't listen to that. Investing Compass, Morningstar Australia. Yes, I do listen to a lot of podcasts. The Investing for Beginners podcast. That's more American focused. Investing Insights from Morningstar. Macro Musings with David Beckworth, more of an economics one. Macro Voices with Eric Townsend and Magellan in the Know. Millennial Forecasting, Investors Podcast Network. Oh, I have a lot here. Money Investing with Andrew Baxter, The Money Cafe with Alan Kohler, Money for the Rest of Us, The Money Puzzle with James Kirby, Money Talks from The Economists, more and more sporting forecasts, podcasts, Odd Lots, one I started listening to lately because they talked about odd shops. And I actually do like that. It's more of a, I suppose, an economic podcast. On the Couch with Marcus Today, fairly random. Few podcasts that don't update. One, Pitchfork Economics, so more Planet Money, love that, NPR. QAV, Investing in Shares with Tony Kynaston and Cameron Riley. They have a really good or interesting investing style. Rivkin Investment Podcasts, The Rules of Investing Livewire, Shares for Beginners, Philip Muscatello, Small Caps. Don't see many small caps episodes recently. In fact, the last one was the 4th of July. Let's a Stock Club with My Wall Street, Stock Insiders with Christina Morrissey, although that's inactive. Stock Market Crash of 1929. This is one podcast, or 3 episodes of the podcast. Stock Market Millionaire, that's inactive as well. Stocks Nests or Stocks Neat with Forager Funds. Talking Trading with what's her name? Louise Bedford. Talking Wealth Podcast with Dale Gillum, blah, blah, blah. I don't listen to all theirs, but just on occasion I will. Trawling for 10 Baggers. And We Study Billionaires, the Investors Podcast Network. In fact, that was the first podcast I listened to. And Your Wealth with Nab. That has, what's her name? What is her name again? What is her name? What is her name? She's on a lot of podcasts. I forget. She's a woman. Anyway, those are the podcasts I listen to. So a lot. I don't listen to every single podcast, but I will pick and choose based off what they're talking about, that sort of thing, because I just have too much to listen to. So thank you. Hopefully I have given you just some thoughts or some possibilities there. Okay, that's all I have for today's video because it's just gone over 1 hour and I want to keep these videos to about 1 hour. Not much more than 1. So if you have any thoughts, any questions, leave those in the comment section of this video. Otherwise, I am not I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.